Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A third bearish black crow yesterday. The indecision seen last week that on a daily basis eventually led to a fourth countering move after the market bounced up off the January high at 69.10 seems to have slowly finalized. I'm not comfortable about saying it has ceased, but the market is heading the way of last week's weekly key reversal down and seems likely to test the January high once again at 69.10 and also the gently rising medium moving average currently at 69.13. I suppose this can ultimately be traced back to the failure on the 16th of June to break the projected 50% Fibonacci line overhead at 72.15. Personally, I have concerns about this market. Now, so far today, a higher open and an attempt to move back up, but it seems to have failed as prices have dropped back and it looks like an indecisive spinning top right now. I suspect the January high and the rising medium moving average may have precipitated that move lower for the moment. German DAX Futures. A bearish black Mariposa yesterday, this coming after the prior two sessions made consecutive, if opposing, indecisive spinning tops that whacked into the overhead resistance of the all-time high made in June at 15.806 and ended up getting nowhere. It's all deeply disturbing. The move yesterday saw the market punch down through and close below the 50% projected Fibonacci line at 15.629, but I see this level more as an attractor for the market at this time. The real support, I suspect, is at the gently rising short medium moving average, currently 15.512, and the likewise medium moving average, currently 15.208, a little further down. This action yesterday, and I suppose all this week now, is not as supportive an outcome as I suspect many would have hoped, especially after May's monthly key reversal up. It seems still to be, as I detailed in the final 2 weeks before my annual leave, all getting a bit precious now. Now, so far today, a retreat back up over the 50% Fibonacci line to start with, but that has quickly given way to a drop down to yesterday's close and today's open, and looking like an indecisive doji cross right now. Like I said earlier, it is all getting a bit precious now. US E-mini S&P futures. Okay, so 2 weeks ago we had the break upwards out of the not that distinct rising wedge pattern formed over mid-May to late June. The target on the top side, that is target X, is in the 44.12 area. We've come closer to reaching up towards that number, but 2 days ago we had an outside day, the lesser cousin of the key reversal, and it seems like we may have issues trying to punch up through the 43.85 area. This leaves a small question mark on whether the market can make it up there at all, but so far it is a small question mark. The nearby support of the 50% projected Fibonacci line at 43.43 is still there, as is the upper trend line, currently 42.92, of the rising wedge pattern. So far this doesn't look like a false break higher, more like the real thing. Now further below we have both the rising short medium moving average, currently at 42.45, and the medium moving average, currently 41.43, plus a 100% projected Fibonacci line at 42.02 and a pair of 50% projected Fibonacci lines at 41.81 and 40.82. Now then, yesterday's action tested down and through the 50% projected Fibonacci line, but closed up over it still. Looks like a possible bull hammer, but it is not ideal. So far today, well, a lower open, and again another dip below the 50% projected Fibonacci line, but also another move back up and looking a little bit like a bullish double at the moment, though it is still far too early. French CAC 40 futures. I've left the recent late February to late March broken bullish shift picture on the daily chart for just one more time, and that's to show how far the market has moved away from the bullish incentive. It seems that since mid-June this market has taken a course of 2 steps down, followed by 1 step up, and then again 2 steps down, etc. Yesterday was the most recent episode of this dance, with a bearish black Mariposa that dropped down to test the old 50% projected Fibonacci line at 64.81, as well as the short medium moving average currently at 64.76. Both were tested. The 50% projected Fibonacci line breached, but neither broken yesterday. Overhead, the short moving average, currently at 65.37, is acting as sort of a cap of sorts on the market for this week. And I have drawn a new downtrend, currently at 65.52 from the high in June, though it is very much a prospective downtrend at this time. Now, meanwhile, further down, well, we really don't have that much until we reach down to the 50% projected the separate 50% projected Fibonacci line at 63.48. And that is a reasonable distance below. So far today, a slightly higher open, and then a swift move lower down through both the 50% projected Fibonacci line and the short medium one. Moving average, that is. Right now we're below both, and seemingly contemplating whether to move down to test that lower separate 50% projected Fibonacci line at 63.48. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.